First, Nvidia and now Micron, the chipmaker this morning, warning that revenue could fall short of already reduced guidance as it sees a challenging market environment ahead. It was just 40 days ago that Micron first cut expectations for the quarter, saying smartphone demand would be meaningfully lower than forecast. Shares closed down almost 4%. The news, no surprise, rattling the entire sector for a second day as shares of Applied Materials, Lam Research, and others also fell. I mean, how many times are we going to trade lower on basically the same sort of thing, Dan?
Yeah, I think it's the frequency in which we're getting these things. Yeah. And I think that when we were talking about, I think a month and a half ago, all of those pre-announcements that we got soon after we had just seen the Q1 results and the Q2 guidance. So here we're seeing a shift from kind of on the line stuff to some more infrastructure-y sort of stuff. And so to me, I think there's a lot of things you can extrapolate from the Micron, again, 40 days after they gave that guidance on June 30th. And, you know, I got to tell you, I was not here yesterday. That Nvidia revenue miss, that was eye-popping, and I'm actually surprised it's not down a lot more. I'm surprised that the SMH, the ETF that tracks the semiconductor index, has not really. I mean, maybe they are going back to lows, and maybe that's the sector that you have to watch. Forget the meme stuff or whatever, and that's probably why you'll continue to see crowding, I guess, in the Apple and the Microsoft.
I mean, for a name that had been so loved, that executed so well over the course of time, Nvidia, and then to see. I mean, the gaming revenue line was just disastrous.
And then, so they said that data centers should hold in, which that's fine. Right. Let's see what happens. But, you know, Carter Worth was on last night. He had a great SOX chart, basically upper left, lower right. And we talked about Nvidia. Dan's right. From 8.1 billion down to 6.7 billion. That's not insignificant. And if they miss again in a couple weeks on the report, this is a stock that went from 145 north of 190. I think it could challenge that 145 area again. And Micron's the same thing. A company that we thought got past the commoditization of DRAM and NAND, they didn't. When stocks like this are this cheap on valuation, it's typically a warning sign. I think Micron can go down as well.
You know, if you had said this is going to happen today, Julie, and how do you think the stock market will trade? That's almost another game in and of itself.
Yeah, I play that
game. But that Nvidia had a disastrous quarter last night. Micron would take down their guidance for the second time in 40 days, essentially. How would the markets trade? One might have said, you know what, I think the markets will trade lower because, you know what, semiconductors are highly cyclical. Maybe they're telling us something about the U.S. economy and companies' difficulties in forecasting business just a month out. And yet here we were today. It was really confined, the damage was, to the chip sector.
I think that's right. I think everyone is realizing that these businesses have more cyclicality. We had hoped that with consolidation that it would be better, but I don't think it's really that much better for them. And they still have a very hard time forecasting their own demand, like most businesses, right? That's what makes this job interesting, I would say. But I think if I look forward and across, it really depends on what you're exposed to. And if you have any kind of chip exposure to the consumer, I think you're going to be in a weaker position than if you have chip exposure to industrials or to automation. I think that's a better place to be. So that's kind of what we're trying to keep in mind is think of the end user. That's really how you position yourself.
You know, when we saw that weakness in yields, particularly on the back end, you saw the flight of capital back into growth, back into technology. And this isn't just an Nvidia thing. This isn't just a Micron thing. AMD told you the same thing, and they've pretty much been a darling this entire time. They said, listen, guidance is going to continue to be challenged. And what I think investors are going to have to continue to hear is the same message on repeat, particularly with yields where they are. I think between tomorrow, September's Fed action, and continued space in this semi space, I think those are going to be the things that contribute to us kind of rolling over and taking another leg lower. I'll also mention, if you take a look at the XLY, which also got a pop when we saw commodities kind of come off, all of that stuff is also starting to roll over. So for whatever reason, this move back lower is a little bit longer than we might have anticipated, but you are starting to see those cracks.
Yeah, you know, Julie makes a great point about the semiconductors exposed to consumers, to industrials, and we just looked at Texas Instruments just a couple weeks ago had actually really good. I mean, I think we were all surprised, not only in the report, but also the guidance. And, you know, when you think about the areas in industrial and autos and stuff where we know that there's supply constraints and we know that there's going to be a demand for a while, I mean, like that is a place to be. And you look at Texas Instruments, it's down only 6% on the year, and it's fairly near those recent all-time highs. So I think there's places that you can hide out in semis, but right now, the ones that are warning, I just don't think you want to try buying them on the way back to their lows that they made last month.